Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. I'm back with an update on coronavirus and its influence on financial markets. The first and the foremost, the important thing for an equity market and the reason why we are trading higher is because the US got the approval for a 500 billion worth of loans for smaller businesses. Of course, investors were highly concerned that what is going to happen with the smaller businesses because of the influence of the coronavirus, because of the influence of the global lockdown and the spike in the bankruptcy rate. Now, with the approval of this particular fund, which by the way, it seems like this is going to be the last one with respect to any support coming, for the time being at least, the optimism is that perhaps we are going to see that momentum to the upside in the equity market, and this is why we are seeing some surge in the equity futures for the US markets today. But here is my concern. We have equity markets on one side, right, and they have bounced more than 28% from their recent lows, right, or more or less around that level. But then we have oil prices which are sitting at multi-decade low. There is a major disconnect, and today, by the way, Brent has touched the lowest level in this century. That means that oil prices are still dragging to the downside, despite the fact that Donald Trump thinks that he's going to give that extra boost to the companies which are directly involved in the US shale oil production. But still, there is a structural damage over here which is not reflected in the equity market, and this is where my concern is and how that is going to pan out in the coming future. This is why I think the equity market is likely to move to the downside. That's all for today. See you guys tomorrow.